Hi guys. Well, my strategy is pretty simple. I look for rotations on the open at the market. In the support that I look for is market profile and Keltner Channel, and as well as you see the Renko Bars. So at the open, what I do is that I first draw where did the highest and lowest of the first minute candle price went to, so I have a reference for the open and know what's going on with the price. After that, I wait for a decision on the movement of the price. In trend days, this strategy works best. You have to be very very careful if you notice that the price is not deciding is not taking momentum at any way or upwards or downwards. And what you gotta do, for example, is I wait for a breakout in the opening range and look for an extended movement like this one. You can tell that it did several points on the way down. I copy it and look for a replication of this rotation when the price goes back to the opening range. So for example, at this time it made a low here and went back, and I started looking for shorting opportunities when it came to the 5 minutes SMA, and was in the upper Keltner channel around here. What I do is that I make trades 3 to 1. So what I do is I have my tool that gives me approximately 40 ticks or 50 ticks of risk, and I try to look for a 2 for 1. So in this case, I entered in here and I liquidated my position in here. Also, as well, is good to take care. I try to take, if I get more than one contract, I try to liquidate the first one at the next volume high volume node that is coming to find the price, and I look for a second way out at the finish of close to the finish of the rotation extension. And this time, for example, I was stopped out when the price was returning because I didn't cash out on the way down. But this BLE of the market profile gives me a way to protect. I was protecting here, and exactly as they thought. If it didn't hold that level, it will go all the way to the top Keltner channel again, because we were in a downtrend. At this time, for example, I didn't get in this movement because I was waiting for the 5 SMA. I usually tend to look for which area is best, and I do one shot on each rotation. And I was aiming to get the entry here because I was closer to the opening range low, but it didn't went over there. So what I did was to wait because I didn't get that one. And again, the rotations here start to get smaller, so it was a no-go for me. So I had to wait for the price to go back again to the Keltner upper channel. Usually, what I look for is pretty much rotations extensions. When the rotation that it's called measure move objectives. When a rotation moves a certain direction, I look for a similar rotation, a little bit smaller to be safe, to take it again. And at an extreme point, should be SMA of 5 minutes, maybe the SMA of 1 minute. For example, if I had taken the SMA of 1 minute here, I might have been able to get in. Actually, I would have done it here. get in, take some hit, and then I will have to taking away again some money again at the high volume node, and expecting that I wouldn't have protected this as only break even, and I would have gotten a bigger second contract sale. But this level, the 1300, for example, that is more psychological, I would say. You gotta take care in case of a sudden reaction of these prices. You never know. My main indicators, well, as you see, are SMAs, Keltner channels, because I believe the price moves in ranges. I don't like to be drawing the ranges. I try to look which time frame is moving on, maybe 1 minute or 5 minutes, depending on what is doing the price. I will try to lean on the upper channels to look for downward moves, or in the lower channels for upward moves. For example, in here, you can tell. I'll also, of course, set some self my self levels. I look for low volume nodes in a higher picture. For example, in 60 minutes, I look for lower volume nodes or higher volume nodes, and I have my conventions of colors to get in to know where is going the price in the higher time frame, because I just have to know what is going on in the short time frame and have an idea where the price is reaching at in the bigger picture without having to look elsewhere. The way I manage risk in my evaluation and in the real account is the same. I used to take 3 trades with a risk of about 50 ticks per tick trade. The only change is that when I'm ahead and I have made some money have some money in the bank, I tend to try twice the risk with a second contract, and I try to let it run. But at first, I always take only one contract, and I try to cash out as soon as it's getting to a possible reaction area. I play it safe and just charge if I'm getting my way. After that, I try a second contract to let it run, but I keep that one very protected in case the movements not doesn't follow through. I just lose usually my first contract. The second one is very heavily protected and or fastly protected to break even. The thing is that that kicks me out more often, but is safer, and I keep my original risk of one contract. Well, on the evaluation, I took today I took this profitable trade. This was a breakout. Here it is. What I did is, as I told you, I wait for when the price is it's on momentum. I got in here at the second deviation of this movement. I was hoping that the price would reject the lower channel, but it will continue again to try to aim to the lows of this channel. The thing is that it didn't. It bounced really fast, and I just got stopped out in here, and the movement didn't follow through. The price had to go back to the supply side and then charge again with more momentum. So it was a precipitative entry. Another kind of interesting stuff that I'd like to look is order flow, the delta. Usually at the beginning of the session, you would see that when the delta starts to dry out, you can see reversal patterns. And if it's located, for example, here, I don't have I didn't have a clue if the movement was gonna continue or not. I was tempted to try to do a sale for a continuation, but the matter that the opening range low was here made me wait, and it was a smart move. Here, when you get, like, again, start of some selling and you are in a good area to sell, you go with the flow. Usually when there is a lot of selling, that's the moment to cash out. If you got to see the chance that the people is going a certain way, and this is what the order flow shows. Market orders that are going in a certain direction, and for example, at this time, the market order were looking for they were buying more than selling, and there were a lot. So I said, okay, they might know something, but if they cannot hold up, they are gonna get trapped, and that's exactly what happened. And how I got my short and continuing with my short buys for the day. Again, in this one, the people were not convinced that it was gonna be a move towards the upside really strong. So they were conservatives, and this what it shows me. For example, is like it was a consistent sale, and that might be the reason that it was a deeper way on the way down.